What is up, everyone? This is Shinker Financial back. I thought this would be a really fun video. First things first, I am not a financial advisor. I'm not a CFP, not a BFP, not a CFA, not a BFA, but a BFA. I'm none of those things. This is just based off my experience. So take this advice with a grain of salt. This is just my opinion and what I have seen through the data and through personal experience. So you can feel free to disagree. Feel free to disagree with this. This is just taking this advice with a grain of salt. But I'm going to come at you with some data, so be prepared to defend that if you're going to disagree. So this video is going to be a tier list of investments. What I mean by that is I'm going to be going through different types of investments, typically the most popular ones, and then grading them on a tier scale. Yes, we've all seen those videos. Yes, they're a little cringy, but they're fun as heck. So let's get right into it. First off, we're going to go with one of my favorites, okay? This does not mean, just so you know, this is not a get rich quick investment video on tiers, how to get the richest the fastest. No, that's not what this is. I am grading based on reliability, tried and true, and safety. That's a big one. Also compounding and also long-term wealth growth. That is what I'm grading on. This is not a get rich quick, what gets you the richest the fastest. It's not what this is. It's going to be graded on reliability, long-term growth and compounding, and also safety. Because in the scary and terrible cost of living situations, we see fuel costs are up. A lot of people, they want security. Okay, so first up, we have dividend stocks, okay? Let's just get right to it. Bang! We're going right off the bat. We're putting it at an A tier score, okay? Listen, I know a lot of people are going to be coming at this saying, dude, come on, how are dividend stocks that great? They only work if you're rich, blah, 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 blah. However, people don't understand. If you really dig into it, here's the thing. I don't really recommend it for someone who's not willing to study certain stocks and go into stocks and really evaluate the valuation of each stock with using ratios, stuff like that. I don't recommend that, okay? I don't recommend this to someone who's not really a seasoned investor, someone who's just not willing to study into this, okay? I recommend this for someone who really loves this stuff, like me, to dig into each stock that provides a good dividend, okay? Typically 1% or above. However, they dig into the metrics as well in terms of, okay, this stock is priced very low for what it is actually earning over time, or ooh, I can see this rising up in the future and they provide a good dividend. Bang, I'm going to invest in a long-term thing with this, okay? So if you have $200, yes, this sounds like a terrible move because what, I'm going to make a dividend. It's going to be, I'm just going to throw a number out there, 10 cents a year. And, oh, wow, dividend stocks. Well, that's not really what I'm talking about here. I'm talking about dividend stocks that are also going to grow over time. So not only if you're good at evaluating stocks, you'll get the growth over time of that stock price going up if you evaluate it well, but also the dividend itself, and you can choose to reinvest those as always, and that can compound over time. So this isn't just buy one dividend stock and you're chilling. This is like, for example, personally, this is about 10% of my portfolio, 10 to 20% is dividend stocks. And it's not just one stock, okay? It's like 20 to 30. And that way I'm naturally diverse. So I got to be honest here. Not all my picks have gone up. Oh my gosh, 20% in 1 year. However, I'm still giving the dividend, but some of them have gone up 30%, even more, plus the dividend. So it balances out, okay? So I'm putting dividend stocks at A tier, okay? You don't manage dividend stocks, okay? You're buying into a company and receiving their profits for doing absolutely nothing. Come on. Okay, second off, I am going to dig into franchises, okay? this is something I've even thought about, like, oh my gosh, should I save up money and do this? I don't really like the 9 to 5 grind, so I wanna be a business owner. I wanna do this, blah blah blah. And I've heard lots and lots of stories of franchises, but I am going to put it at a B tier. Okay, yes, I put it at a B tier. Here's why. Franchises, they have a way, way, way higher success rate rather than other small businesses. Rather, like, let's say you're starting one on your own. And the reason is because the support of corporate. Now, the drawback is that all that support and all that help does come at a cost, and that cost is your money. Okay, you're not gonna get absolutely rich out of your mind with setting up one franchise. If that's not what you're after, dude, then go find a good franchise with good cash flow and good reputation and go for it. However, you have to be very careful, and it really depends on the franchise, because you can choose a franchise that is absolutely garbo and you can go broke and the business can fail. But if you pick a tried and true franchise, you might up your income by like 100K a year. Again, this might just be like, okay, you're upping your income from 80K a year at your old sales job to 200K as now a franchise owner if you run it really, really well. But again, you'll run into really things with corporate where you got to pay them a lot of money. It's a lot of management, and it's like, dang, a lot of different investments, they don't require as much energy or time. But if you're looking to make a big career change and you're like, taking businesses that are tried and true, and you're like, ooh, I know how to run a business. I've been in food and beverage. Let's start a franchise. I've heard stories, though, of people literally getting like 3 or 4 Orange Theory franchises, and each location makes 400K in revenue. I don't think it's profit. I think revenue. And again, that's like, I don't know, do the math on that. $1.6 million a year. I don't know. But that's great. But that takes a lot of, that's not like every single franchise story, okay? So that's why I'm putting it at B tier, because it's more reliable and there's higher success rate than a small business. However, it does take a large amount of cash to get started. And if you're just getting into investing, you can't just buy a franchise. You typically need like 100K at least for a lot of these things. Okay. Next up, we're going to go into multifamily investing. Okay, multifamily real estate. We're going to put this one as B tier, right behind the franchise. Okay, to be honest, I don't know if it's better than franchise investing or not. I think typically the scalability is 100% better if you do it right. Okay, the reason why I put it behind franchises was not because the scalability. It is because the risk. If you're going to follow my channel, you're going to know I hate risk. I don't like debt. I don't like any of that stuff. I value security and long-term growth over rapid, just fast pace. Oh, I want to get rich so bad. Oh, and then people drive themselves into the absolute ground. Am I going to sit here and say that, oh, it doesn't work and people don't get rich really fast off real estate investing? No. But here's the thing. It's all about cash flow. And a lot of people jump into things like real estate investing and they don't do enough study. It's a math game. They don't do enough, math, simulation, whatever, see how much it cost of management is going to be, plus fixed costs, plus cash flow. How can I get the rents up? You got to be on your grind for that. And if you're going to it's really hard to have a full-time job and do this. Most real estate investors who are very successful, they do it full-time. And if you learn the game really well, am I saying you can't do this? No. you can get really, really wealthy off real estate investing, especially multifamily, but it comes at a cost, and the cost is a lot of time, a lot of capital, and a lot of risk. So that's why I'm putting it at B tier. And who cares? Okay. A lot of people say, well, hey, in 2 years, I got 30 properties, multifamily. Okay, I understand that. But you've also got yourself in a tank of debt, like massive, massive amounts of debt. Yes, you're cash flowing, I don't know, 500K a year maybe at tip top. But dude, you got like $2 million in debt you got to pay off if you acquired all these properties that you couldn't afford, so to speak. And if you do it right, can you pay that off? Yes. But dude, if you didn't pick the right properties or put yourself in a very secure position and the market crashes, you're going to get absolutely crushed. And I don't want to do that, especially if you want to raise a family one day. You don't want to bring them into that risk as well. So that's why I'm putting it B tier. Next, we're going to go into commercial investing. So like businesses and stuff. And I'm going to put that in front of franchise. Okay, if it lets me, holy smokes. I'm going to put that in front of franchises. The B tiers are hard. They're all kind of the same, I'm going to be real. But I'm putting this in front of franchises because if you do this right, most businesses, they're not like tenants. And if you invite in a business that has good long-term growth and just a future and just or history of just steadiness, you can just invite in a business and they're there for 20 years, and you don't have to like, they're typically not as, you don't have to manage as much. They clean it all, they do all the work, they do this, they do that. You don't manage any of it really, besides, okay, are they paying rent, all this stuff. It's not like a tenant where they can leave the lease just like this. Business contracts are usually very, very professional, and they are there for a long time and very, very loyal, unlike a typical tenant, especially in a low-income area. So that's why I'm putting it above those two. In the terms of why am I putting it above franchises is just because if you have the capital to do this, you're pretty set and you have a lot of cash flow for years and years and years. And the only reason I would advise against it is because of that risk. Again, if you do not have the capital to do this, I do not advise going into this stuff, but some people do. So there you go. Okay, we're going into the controversial ones. Here we go. We're going to go into Bitcoin. Psych! I'm putting it as C. Here come the Bitcoin crypto bros. I'm sorry. I don't know enough about it. I'm going to be honest. I don't know enough about it to put it in the higher tiers. But at the same time, I think I'm going to put it here with the knowledge I have already. And that is, the knowledge I have already is I don't understand the physical product because there is none. And I don't understand the digital product because there is none. Okay? And what I mean by that is I understand the thought process of one currency that never grows, and I just don't see enough evidence that it's going to shoot to 1 million, but at the same time, I don't see enough evidence that it's going to completely crash. So I am on the fence with Bitcoin, and that is why I'm putting it at C, because I don't really understand it, and I have about 2 to 3% of my portfolio in it, maybe less, and that is the sole reason of, for some reason, I can see it just shooting to the moon. I don't know why. I can't explain it. I can just see it shooting to the moon, so I guess the only thing I can say here is 1 to 2% of your portfolio, if you want to put it there, or more knowledge about it than me. I mean, give a little in Bitcoin. It's not going away, I don't really think. And I do think it's just going to either go up or go to zero. There's no in between. It's going to go out of this world insanely up or go to zero. So that's why I'm putting it at C tier. In terms of the other crypto stuff, Come on, there's a lot of good ones. Nope, we're going to D. Okay, these suck. I'm be real, they suck. I know so many people. XRP up 100% today, and then the next week they don't text anymore and they don't say anything because it's down 50. And what I mean by that is, again, I don't know enough about crypto, but I don't see any of these other crypto coins, crypto meme coins, blah 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 blah, blah doing anything except failing over time. And these day traders, man, that vest a little bit into crypto goes up, blah blah blah. I think that's dumb and very risky. Again, I'm anti-risk, but some people have gotten rich off of it. I'm not gonna lie, but I think it's dumb. And here, Shinker Financial, we're talking about long-term investments and smart investments for your family, for your friends, for your faith, honestly, to rest in and to know, okay, I am being a good steward with my resources. Okay, so that's why we're putting all the crypto stuff at D, besides Bitcoin, because Bitcoin, hot take, that's the only one I think is going to survive long term. All this other stuff is absolute bullcrap, and people spend way too much time and research on it. Okay, next we're going to go into individual stocks. Ooh, this might be a surprising one, but I'm putting this at C, behind Bitcoin. Okay? I do not invest necessarily in individual stocks that I have a hunch about. And what I mean by that is, this may be a hot take, but I do not trust my skills and knowledge enough to invest in individual stocks that I have a hunch about without doing extensive research. And if they do not have a dividend, I do not invest in them. And the reason is because stocks are so volatile, and you have no diversity investing in individual stocks unless you pick a bunch. And if they do not have a dividend, they do not have cushion. So again, I have about 2 to 3% of my, on par with Bitcoin, of my portfolio in individual stocks, but generally I do not invest in them and I stay away from them unless I really get the hunch of, one is going to absolutely shoot to the moon. They're doing this deal with this company. But hunch individual stock investing without a dividend and without evaluating it correctly, I stay away from that. I don't like it because it's so volatile and it's scary, and I don't like that. However, there are some people who are really, really, really good at that stuff, like the CFBs, the BFBs, the CFAs, the B2B, that do all that stuff, and they're really good at that, and they can track stocks really well that even don't have a dividend and make a lot of money. So I'm not saying C tier meaning it's a bad investment for this one. I'm saying C tier because you really, really got to have a good expertise to get into that. So there you go. Index funds. Come on. You know what this channel is about. Boom! Our first S tier. Index funds are absolute king. And actually, Jesus Christ is king. But anyways, index funds are king because they are the most safe, naturally diverse, and beat, especially the S&P 500. S&P 500, they beat 80% of mutual funds and active investments. What I mean by that is your financial advisor is most likely losing over time to the S&P 500, and you're paying him to lose. You're paying him to lose. Okay? So this isn't, I need to know so much about investing to really actively manage my own accounts. No, you don't. You need to learn about index funds. What are the safest? What are the best? S&P 500 ETFs. They are naturally diverse. Okay? They have the best track record over time, getting about 8 to 9% a year since it opened. Okay? The recent years, they've been up like 10% each year, even more. and you don't have to do anything. You buy and you never look at it again, okay? And they have dividends usually. So stop with this, I have to be a professional to know this stuff, and just take control and take ownership and stewardship of your own finances, and stop just giving money to someone who is losing for you, okay, and losing over time. There are some people who do need financial advisors. If you're super busy, you know nothing about this, why not go? But if you're actually like hungry about this stuff and like, okay, I want to learn more, dig into this. It's not that hard. Just find a good index fund and just buy it and never look at it again. Okay. One thing I will say is they do get inflated time to time, and the S&P 500 seems to be inflated right now. So you might not get as good as returns as what we've seen in the past 5 years. But over time, we're betting on that 8%. So that's all that matters. Okay. Small business. I am going to go C tier. Okay. The reason I'm going C tier behind all those is because the risk as well. Most small businesses fail. That's just what the data shows. Most small businesses fail. Does that mean if you have an entrepreneurial mindset and you're like, you know what, I'm going to try for this small business and I'm going to do it? I am totally not against that. What I am against is if you don't have an adequate plan, an adequate drive, do not take out debt to start a business. Just don't do it if it's not a tried and true business and you don't have the facts to back it up. If you're just, you know what, I'm going to take a swing at this and pull out 100K of debt. Stop, because the data just shows most likely it's going to fail. My recommendation is if you have a small business idea, do it for the least amount as possible or free, but do not put yourself and your family in jeopardy while pursuing it, okay? Unless you're like the top 10% of these entrepreneurial dudes who just grind and like so smart and like this is for sure gonna work, most likely you're not. So just stop. So just don't do it unless you have a great plan and it's free to start and you're really locked in and you have the math correct, or else it's just you're taking on too much risk for the reward. Yeah. That's my take with that. Residential investing, I'm sorry. I'm so sorry. I'm putting that at, come on. Oh my gosh. D. Okay. Might get hate on this for this, but again, if you do not have the capital to buy a house, it's like, it's not worth it. Especially single family residential homes, it's just not worth it. And this is because you're not making as much income for the valuation of a one single home residential house as if you were to go into multifamily or commercial. And the only way this works, like other real estate investing, without as much risk and way more reward, is if you already have the capital and you're moving out of that house. There's no house hacking. To sum this up, there's no house hacking in buying a single family home and renting it out, where you can buy with the same valuation a multifamily property with 3 more, let's just say a mock situation, 3 more rooms where you're making double or triple the income. It just doesn't make sense mathematically. And unless you're in the really, really high-end real estate single-family homes where that make big amounts of money, fix and flip, all that stuff, that does work. Again, this channel, though, is anti-risk and most reward for the least amount of risk. And this just doesn't make sense mathematically compared to other investment opportunities. So that's why I'm putting it there. Okay. Boys and girls, that is it for my tier list. Let me know. This was a really fun video for me to make. Let me know what kind of other videos I should make in terms of investing. I know this is kind of like not really a beginner friendly video. However, it does allow you to take a look at these things, okay, and be like, okay, why is he saying this? Why does he like index funds over, franchises? What does that mean? Blah, blah, blah. And you can kind of go in and research this yourself. So if you like this video, give it a thumbs up, subscribe to my channel. It'd be greatly appreciated. And peace.